Hello and welcome to Pro Trader Strategies Market Commentary. My name's Eric Wilkinson. Some of you might recognize me as the Wolfman from CNBC, Fox Business, or maybe even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind everything that we talk about in these commentaries is not a solicitation to buy or sell any of these securities or strategies. What I'm here to do is teach you guys some different option strategies and how to implement those strategies in your portfolio. That is the key, is the implementation. Anybody can teach you how to build it. I teach you how to implement it. Anyway, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, economic data across the pond, pretty light, and even here in the United States, we did get Empire Manufacturing Index coming in at 2, expected before, so less than expected there, but we did not see that go negative, which is good. Another thing to keep in mind, we have the FOMC meeting on Wednesday, so that is going to be key for interest rates, anybody trading those. And unless you were under a rock, you probably heard that Iran has supposedly bombed Saudi Arabia using drones, and those bombs basically were targeting oil installations and stuff like that in refineries. So that has caused crude oil to spike right now. You can see it's up $6 into that 60 handle. We did get up there testing the value area high, but have since started coming back as people are like, you know what? And this is the first thing I thought of, is this is going to be good for the frackers here in the United States, because anything that gets over $50 a barrel, like here, we see that that's usually where we're finding that support level, in and around that 50, lower 50s. That's why I've been talking about we aren't going to probably see it go much below 50, because then we start seeing the supply come out, all right? Meaning there's less supply on the market and that demand stays constant. We should see prices rise. That's your basic Econ 101, supply demand. But now we're seeing Saudi Arabia, which is one of the largest producers of oil in OPEC. They are limiting supply. Demand remaining constant, we would expect that to drive higher. Well, on the flip side of that, we have as much oil here in the United States as Saudi Arabia, but ours is a little bit more difficult, actually a lot more difficult to pull out of the ground, because ours is stuck in the rock and we're squeezing oil from a rock, which is much more difficult than separating the rock from the oil. All right, you can use a basic filter for that, whereas you need a lot of infrastructure to squeeze the oil from the rock. But that being said, oil moving higher is going to do a lot of good things for some of these oil refineries. ConocoPhillips and even some of the oil ETFs like USO have really been spiking today. Again, this is a supply issue we're going to have to keep an eye on, and those tensions in the Middle East are going to be a major factor in what's going to be driving some of these markets here going forward. I believe we should stay out of that whole mess. I mean, what do we care about what happens with Saudi Arabia, to be honest, and their economic woes of oil. Anyway, so we're breaking out of this little area here that I thought we would probably stay in, but this is a bit of a different situation with Saudi Arabia being bombed and everything else, all right? So crude oil is driving higher. Probably a good day to go and buy gasoline before it gets to the pump. All right, we've got gold moving a little bit higher today, up $10. Yes, it looks like it's off, but a lot of this has to do with those tensions and people doing a flight to safety, if you will, with gold futures. They're going to be putting money into gold and driving that price higher. Bonds, trying to make a bit of a rebound after Friday when we were down like 2 points. Remember, we were talking about that earlier on. It continued to accelerate throughout the day. It was almost never an uptick in the bonds. A lot of people taking out some of that pricing from the from what the FOMC is going to be doing with interest rates. Again, I think that a lot of people were overestimating what they were going to lower interest rates, and I think that the market's starting to finally see that now that we have the FOMC at hand, and I think those Fed governors are probably going to stay away from it as well. All right, with all of this tension going on, of course, we're seeing volatility spike a little bit back into the teens and safely in the teens there. You can see here the Dow Jones off by about 125 points. Not a major move by any stretch of the imagination, especially from what we've seen recently. 120 point move is just barely a blip on the index here. But again, we're starting to see some of that fear come into the markets. A lot of these oil producers and stuff like that are holding up a lot of these major markets here. We've got the Dow Jones down by 120. We've got the NASDAQ down by about 30 points on the day, but pretty much close to where we were on the open of the overnight session. So not too far off of that. As you can see, we saw a major sell-off overnight when the futures opened, and we'll see that show up a little bit more clearly when we break down the E-mini S&Ps here in just a second. This is the E-mini S&Ps just going below 3,000, back and forth toggling. That's going to be a battle for the bulls and the bears today that will be interesting to watch, whether or not we can settle above that psychological level of 3,000. Again, I actually kind of expect the equities to be higher on the end of the day, but we'll have to see about that. You can see here gapping down on the open and of the overnight session. That was Sunday night, and we got those lows in, but then overnight we just slowly started rallying higher and are kind of stuck in a bit of a consolidation here, waiting for the next shoe to drop. So like I said, I expect equities to kind of continue to climb higher without any bad economic data coming out, or not bad, we don't have any economic data, without any news that is disparaging with the tensions in Saudi Arabia. All right, gold. This is something I just wanted to note here. We can see where gold futures, GLD, is up $1.49. That is being offset. If you guys remember, in GLD, I'm in there and short some puts. So I've got this market moving in my direction by 1.5. Okay, it's not much, but you can see that this little move higher here in the volatility of gold is actually offsetting any directionality I have going on. Like I said, we can set ourselves up for success. I got into this with high implied volatility percent, but that doesn't always mean that we don't see volatility continue higher, which is what we're seeing here. I just wanted to show you that. I tried to hit that on a high note with the implied volatility, but we are seeing that spike just a little bit, offsetting my gains, despite the fact that I'm directionally right. That happens. Nothing we can really do to avoid that sometimes. All right, Yum Brands is a trade that I took off on Friday. If you guys remember, excuse me, I was talking about taking this off, and I finally got out of it late in the day on Friday. And in the Yum Brands, I had on the September 110, 120, and 130 put butterfly in there. So it was, 1 by 2 by 1. And I originally did that for $6.02 in there as a credit. So I got a credit of $6, and then I bought it back for $3.16 on Friday. I had to give up quite a bit of edge to get out of some of those in the money puts that were pretty deep. And today might have been a better day to get out of it when it goes down there to touch those, but I was looking at it like I needed to get out of that, and didn't want to see this get a snap back today. So if you waited, then you've probably done very well for that. And then on Friday, I also added Tesla, if I can find Tesla somewhere. Let me see if I can pull up that Tesla chart. I thought I had it up here. Let's just pull up the GLD chart again. Tesla was a trade that I also added and went into the December and bought the 225 puts in there for, what was it, $16.05. Expecting Tesla to start rolling over. Obviously, volatility coming into this would help as well because I'm long those puts. I want to see volatility go higher. I expect that to happen. As you can see, when we're talking about having volatility go higher here. Anytime that the markets start rolling over like this and we start seeing a fallout, we should see maybe this start to climb a little bit, which is what I'm looking for in the implied volatility percent. So if I can get the directionality and that volatility spiking, I'll be able to get to my profit target much quicker on that, which is probably going to be an increase by about 30% on this, unless we go down there really quickly and test those 225 puts, which is slightly lower, in and around this area right here. So I'm expecting us to break down through the 61 Fibonacci. It lines up with 235, and then get a little overextended, maybe even test this value area low right here. So those are my two targets that I think that the market is going to go to. You can see we got a tweezer bottom here, but that could easily be tested as well. All right, so Tesla got on the 225 puts for a bearish move there, heading into their earnings, as I think some people maybe even looking to get out quite quickly. All right, with SPY, a couple of things. I'm going to try to pair out some of my portfolio this week. I'm going to probably leave this trade on because next week I'm going to be heading to Germany for a week, and probably will have very limited access to the market. So I don't want to have a whole lot on while I'm over there and not able to really keep an eyeball on it. But something like this would be perfect for a big outpaced move while I'm on vacation. And so I went in and did the December, bought the 300 straddle in there for $18.07. Again, looking for a big outpaced move. Anything starts looking pretty good here in the United States with economic data, I could get a big move higher, which is what I've been talking about. I'm looking to see the equities make all-time highs here coming this week. We'll have to see how the FOMC treats the market, but expecting a big move there. And if the FOMC signals something to where the equities want to throw a tantrum, that will help me out as well, because I'll get a big directional move, maybe some volatility spiking. We're getting into this, as you can see, with volatility at extreme lows. So anytime we're doing that, we're expecting volatility to rise. I'm getting a little bit of that market move in volatility right now, and a big directional move, whether it's down or up. I don't know which way it's going to go, and I don't care, right? I'm just looking for a big outpaced move to protect my portfolio, and that's what I'm going to be using SPY to do while I'm on vacation. And that's it. That's all I've done. Those two trades I took off on Friday, or took one off, added SPY today, and wanted to talk to you guys about gold. That's about it. This week we are going to be still doing a webinar on Thursday, so check that one out. It is on a bearish directional bias, so this could be the time to start adding some of this stuff. I talk about how to implement it. I'm not just talking about directionality and all of those things. I'm actually talking about how we can implement these to increase our probabilities of success. So check that out at Pro Trader Strategies. Also follow us on Facebook at Pro Trader Strategies as well. All right, if you can't take that, take it easy.